We appreciate your presence as well. Ladies and gentlemen, we hope that you have availed of this refreshment break and that you are now with us for the second part of the second day of the insurance days. And we are here convening for the 10th issue of this today must attend meeting. This is an occasion to celebrate, and we are deeply honored to have high level speakers. We're now going to have another speaker of renown. With us is the President of the European Authority of Insurance and Professional Pensions. In her presentation, she will be talking about the current challenges of the supervision of insurance in view of the emerging risks.
Petra Hilkema, Chairperson, European Insurance and Occupational Pensions Authority. Let's please give her a round of applause. Welcome to you.
Hi, everyone. Good afternoon, everyone. And let me start by saying it's such a pleasure to be here in Casablanca. What a wonderful arrival. So many familiar but also new faces that I'm happy to meet. And so a big thank you to the organization. And also a big thank you to my colleagues in the Supervisory Authority of Morocco for having me here. The title of my speech, What Insurance in a World of Uncertainties, thought-provoking. A lot has been said already, but let me also share from my perspective as a European Insurance and Pensions Authority what we do on that. And for those who are not fully familiar with EIOPA and what we do, we are the European Insurance and Pensions Authority. And we can do three things. We can give advice to the European Commission, Council and Parliament on our own initiative or when asked. We can also provide technical data. We are a data hub. We have a lot of data because of the reporting that is done by all the European insurers, also to us, but also pension funds. We make sure that the supervisors in Europe, in the individual member states, do implement laws, follow law, and if they have a dispute, they can come to us. We're also the face of European supervision on insurance and pensions to non-EU countries. And when I say we, it's not just me as the chairperson of EIOPA. Of course, I have a say in my board, but my board consists of the 27 supervisors in the EU, and that means a lot of different markets. And the previous speaker alluded to that. 27 countries in one continent means that there are differences, but there are also the same problems. And some of the problems I heard that you spoke of today are also our problems. If you look at the pension gap, the risk for people to live in poverty in the EU, that is currently 20%. So 20% of Europeans are at risk of living in poverty at old age because they haven't saved too much. If we look at penetration of insurance, there are still many EU countries that more or less only have mandatory motor insurance, but very little additional insurance. And because of that, we have a huge gap when it comes to the protection of risks resulting from climate change, because currently only 25% of the losses that we expect because of climate change are insured. And that means that 75% is not. And I think here it is good to also work at the international level, because maybe together we can find ways to have people buy more insurance, have governments and insurers work together to solve the fact that too much damage that is coming is currently not covered. But let me look at what we need to do in a world that is transitioning. And there's a lot happening. There's this transitioning into an era of generative AI. And this is going very fast. And that means a lot of potential, from enhancing efficiency, personalizing experience, being actually able, through mobile phones, to reach your consumers and to enable transformative processes. But I'm a supervisor, I look for the risks. There is also a risk that comes with that, because there can be bias, there can be unfair treatment, and there can be vulnerability to cyber attacks. Now, the historical role of insurance sectors has been to provide people and businesses and communities with measures to protect against that and sleep well at night by pooling resources to spreading these risks. However, in today's world, the very nature of the risk is changing, and I think that is a challenge we need to face together. Insurance operates on probability. But what happens if actually we cannot measure the risk and therefore assess the probability? I'm talking about cyber. And also what happens if you can actually measure it really well? You can measure it with such a precision that it's more a certainty than a probability. And here some of the climate change risk, of course, comes into play. And what if things are just simply too costly to insure? Now, in order, and this is really a call to the industry, to fulfill your role, we need to be optimistic, see the possibilities, and find a way to really play the role as society's risk manager. They can help. Insurers can really help. They know how to assess the risks, they know what to do about the risks, they can provide products that protect against the risks. Now, what are these risks? And let me dive into them a bit more specific. We heard many people also yesterday speaking about natural catastrophe risks, so here I'll keep it short. But the efforts to reduce greenhouse gas emissions to meet the EU target for 2030 have not been entirely effective. And we see that the consequences are enormous. Direct losses stemming from natural catastrophe globally amount to $280 billion only last year. And in Europe it was around 80 billion in only 1 year. And the rate of the increase of losses for nat cat in Europe is currently 2.5%. So we see an increase of losses to the economy of 2.5% on a yearly basis. Narrowing the protection gap is therefore one of the priorities of EIOPA in our work. And we're doing different things to deal with that. First of all, and I said that, we have a lot of data. We do data modeling and we provide that data back. So if you go to our website where we have the European Centre of Excellence for Natural Catastrophe Risks, you can find, first of all, open source NatCat data that we share. But you can also find the first European dashboards that shows what perils are there, what is the exposure of 30 individual countries to earthquake, to drought, to forest fires, and to flood, and how much of that is insured. And we update that on a yearly basis so that both governments but also insurers can see what still needs to be done. And through the perspective of sharing the data, we support European supervisors and policymakers in taking steps. And we also support the insurers themselves. We provide a user-friendly application that makes it possible for insurers to actually model climate risk on the basis of a Climata model that was developed by the University of Zurich, but wasn't very consumer-friendly. And by providing this app that makes it user-friendly, also the smaller insurers now can actually model climate change risks without having to buy or develop difficult tooling. Now, second, and we really strongly feel about this, we need more climate adaptation and climate mitigation. It's core, because this increase of 2.5% on a yearly basis is really not sustainable. And this is also why EIOPA, together with our colleagues in the European Central Bank, developed a paper that we published last year on policy solutions on how to close the protection gap. What we see is, first of all, a strong role for insurers to, first of all, share their knowledge about the gap, so raise awareness that there is a gap. Secondly, raise awareness that you need to then insure. And here what we found for European consumers is that there are several reasons why they would not take on insurance. And for sure it's also GDP, but at the same time many feel that it is too expensive But what they think is the price is often too high. So thinking about a cheap, simple product that offers some protection and that is clearly explained by supervisors can really help the uptake of insurance also in certain parts of Europe. The second part is that we need to further develop the ability of reinsurance. And I was very interested in listening to the speaker on reinsurance in Africa. But reinsurance, of course, plays a key role when it comes to the sustainability of business models and the insurability of businesses and individuals. But finally, we also need the government to step in. And these are public-private partnerships. And currently we work on that. We are analyzing 12 schemes that are in the world, among those Italy, France and Spain, particularly France and Spain for drought. They put in place some schemes where there is a cooperation between the market, the businesses and the government in taking care of the risk for drought. And the starting point is actually a signal from the government where the government will not step in. One of the findings when we did a behavioral study on why people don't buy insurance is because they really trust that the government will help if it's necessary. But in reality, that help doesn't always come. In long term, the debt won't be sustainable, and moreover, it often takes longer. So saying that you're not helping as a government for the first, for example, 15%, and that you expect people to get their insurance for the first 15% of the losses is a way to send a clear signal that individuals also have to do something. And a second step would then be that the individuals take an insurance, which is a simple product that also delivers when it's necessary, so clear conditions. And finally, that when they buy the product, they are also incentivized to take measures. When it comes to flooding, don't have all your electricity that comes into the house, don't have that on the ground floor, but move it up so you don't have that damaged when there is a flooding. And finally, of course, there is public-private partnership in the form of a dialogue between businesses, city councils. Where should you build? What crops should you actually consider to have as agriculture? What is sustainable in the long term? And here it's important to realize that insurers need to price for their risks. That's very important for the sustainability of an insurance business. If the price then is high, that is not because insurers don't want to be nice, but it's because the risk is high. And if that's too high, then maybe we need to see what we can do about the risk. And I think it is this dialogue that we need to have as a society between consumers, governments, city councils, and insurance to find solutions. We all have a role to play. But let's move on to another risk that was also mentioned already a bit today, because we have more initiative when it comes to gaps. And the topic I want to touch on now is cyber risk. Cyber risk very much is a protection gap, and it's not so well researched yet. I do not have the data on cyber gaps that I have on climate and nature yet. However, cyber attacks in Europe and elsewhere have steadily gone up. They're on the rise, and so is the demand for cyber insurance. At the same time, for sure, the supply of cyber insurance is up, but it's not at the pace that the demand is. So many businesses and organizations are exposed to losses due to business interruption, incident response expenses, and data breaches. And with that, there is, in an increasingly digitalized global economy, and AI only starting, we have a challenge that we need to look into. The cyber insurance market, as I said, is growing, and actually it tripled in size over the last 5 years, and we expect it to double in the next 2 years in Europe. And still, we don't think that that will be enough. Because despite the fact that businesses have difficulty to assess what is the real impact, 87% of managers do believe that they are inadequately protected against cyber threats. So that is an EU market where 87% of the leaders of companies say they would like to have more protection. I will call that a growth opportunity. One of EIOPA's goals is to protect consumers and businesses in the process of digital transformation. And so what we have done is we focused last year on the medium and small size companies. Normally we look for consumers, but when it comes to cyber, we feel that also the smaller companies, the mom and dad shops, actually need as much help that individual insurers do. And so in order to help understand what the gap is, what the needs are, we did a survey among many, and we are working on the results, and then we'll discuss with the industry what we can do. But the logic you hear is that it starts from reaching out, talking to the market, getting the data, understanding the gaps. What we also did was we launched a digital market monitoring survey, and we collected how much cyber coverage is actually available. And we find that it currently is not enough. So again, call to insurers. There's a large role to play here. Promote awareness of the exposures, share the expertise of risk management, and encourage people to take measures and get insurance. Now, of course, also insurers themselves are not immune to cyber attacks. And cyber resilience of the insurance market itself, the financial sector itself, is essential. And that is why I'm very happy that the European Commission and Parliament and Council agreed on the EU Digital Operational Resilience Act, DORA, that we are currently implementing. And the logic of the DORA Act is threesome. The first, what is helpful with DORA is the reporting. I think all financial institutions need to report a lot on cyber because of different laws. What DORA will do is it will unify that. It's what we call a lex specialis, and it means it overrules all the other reporting requirements, meaning that there will be one way of reporting for industry, thereby reducing a burden. Second is that there will be a standard for testing, for operational resilience testing, which would be also helpful if you are operating in several countries, because once you have done the test, you can say that to all the supervisors, and that should also, first of all, help to raise resilience, but at the same time reduce burden. And finally, and I think this is in essence why this act is so important, as an insurance supervisor, when we look at resilience for cyber risks, we go to the insurer and we look to which the insurer is, to whom are you outsourcing? And then we follow the chain of the outsourcing, sometimes multiple steps. But we often end up with the same cloud providers. And you all know them, and there's a large IT companies worldwide that do cloud. So think Microsoft, Amazon Web Services, Google, they all are out there, Bloomberg. What DORA does is, it doesn't only say that insurers need to be resilient, no, it gives actually EIOPA itself powers to oversee these critical third parties. So as of the 1st of January 2025, EIOPA, together with the Banking and Markets Authority, will be the overseer of the critical third parties that we will identify. But you probably can imagine that it's highly likely that the companies that I just mentioned will be part of that oversight. And with that, we try to enhance the overall resilience of our sector. Ladies and gentlemen, I've addressed two roles of insurers promoting resilience: narrowing existing protection gaps and also managing the emerging ones. Now I would like to turn to one more example, and that is risks stemming from the wide use of artificial intelligence. We are entering into an age of generative AI, which will reshape society. And from the perspective of insurers, this technology offers unprecedented opportunities. Opportunities to streamline operations, innovate your product offerings, and deliver customer value. And that is also why, I think for good reasons, in January, the World Economic Forum published a list of the 5 businesses that will benefit most from AI. And on number 1 was underwriting insurance. However, I'm a supervisor, I look for the risks. These promises come with new risks, including ethical concerns broadly, and in particular also data privacy issues that can lead to discrimination and unfair offering of products. What we are seeing in the EU is that the use of AI in the insurance industry is going up in the value chain. So it starts very much in the back office for efficiency, but it's slowly moving in the way claims are handled and also products are sold. And new actors are entering in the market, both as competitors, but also as cooperative partners that help existing undertakings. Now, for sure, digitalization has not reached the point of truly disrupting. I'm not worried currently about disruption. But nonetheless, it is changing the way consumers approach insurance. And what we see is that younger generations want simple products. They want to have it digital. They want it to be convenient. And they want it available 24/7. That is a change of thinking on how to reach the younger generations. We're also seeing supervisors around the world focused on updating their legislative frameworks and upgrading their skills and knowledge. And so are we. Together again with our banking and markets authority, we founded the Digital Academy for supervisors, and on a monthly basis we are training European supervisors in how to supervise AI. And the EU didn't stop there. We recently also adopted an AI Act, a piece of legislation that is one of the most comprehensive regulatory responses to widespread use of AI that I currently know. It very much is like the GDPR, that is there for data protection, and it's set on the idea that it's focusing on the technology no matter in what sector it is used. And therefore, it also includes the financial sector and therefore insurance. It follows a risk-based approach, identifying certain practices of AI that will simply be forbidden. Face recognition in supermarkets or on the streets, for example. Then there is a second category, which is the high-risk category. And if you're in the high-risk category, you have to comply with a set of rules. Rules that fortunately are very much in line with what we already had and have under Solvency II about fairness, unbiased, good governance, good data and record keeping, etc. But this comes from a different act. And here the EU chose to include from insurance life and health insurance. And why did they do that? They did that because they are mostly concerned about discrimination of individuals that need a life insurance or need a health insurance because of maybe a past of sickness. And here they want to prevent discriminatory measures and steps. Now I want to say that it's not that without the AI Act we would not be supervising that. We also have a mandate under Solvency II to look into this. But I welcome the fact that we can now do this jointly in a more technology-driven basis with others. The challenge of this AI Act for me and for Europe, for insurance supervisors, but our sector will be that we have a sectoral supervisor looking at it that now needs to make sure that it combines that in an efficient way with the AI Act. And therefore, IOPA is currently, with all the member states, I'm leading the work, drafting an application guidance on how to supervise AI, sharing practices. And at the same time, I'm fortunate to also lead that work stream at the international level, in the IAS. We will also draft an application guidance on how to supervise AI at the IAS level. And I'm really looking forward to bringing to you, through publications or consultations, the products hopefully towards the end of the year. Ladies and gentlemen, I'm going to wrap up, even though there's so much more to say. I didn't even touch on what we need to do about the pension gap and how more investment in pensions will not only help to build capital markets union, but will very much also make sure that all our consumers and our citizens can live a good life in retirement. But maybe that is something for next time or during a break. But with all the challenges that we see, there's also a lot of innovation and ideas. And that is, I think, a crucial aspect of fostering diversity and inclusion to make the results happen. Inclusion and diversity, listening from others, that is what we do on a daily basis with 27 different countries, with different languages, different markets, and different needs at one table. Inclusive leadership is not only a reflection of a broad spectrum of perspectives that are everywhere in our society, but it actually encourages critical thinking, not forgetting about something, and having independent opinions. That is a mindset that we need to tackle new problems. And I would like, therefore, to close to reiterate the points that I think echoes throughout this conference, but it's very crucial to emphasize. The insurance industry today is confronted with many challenges, but these challenges are global of nature. And tackling those means that we do not only have to do that on our own as an insurance industry or as an insurance supervisors group, but we can actually collaborate also at an international level, sharing examples of good practices, identifying risks that are coming, and finding ways forward to deal with the risks, help society sleep at night, and economies to thrive. And it is through forums like this where we exchange these ideas in such a full room with such an important market, with so many speakers from many parts of the world, that I think that I really am positive of the fact that we actually will be able to find solutions and show that insurance is here to manage society's risks. And with that, I want to thank you again for the invitation. It was my pleasure to be here. Thank you.
Thank you so much, Petra Hilkema, for your keynote. It was such an honor to have you with us during this 10th edition of this meeting. Thank you for your insights, and you've offered us a very nice transition with our upcoming panel discussion that's going to cover the cyber risks. Mesdames et messieurs, nous avons, grâce aux propos de Madame Petra Hilkema, souligné l'impact croissant.
Thanks to Mrs. Halkema, we have insisted on the importance of the AI in the industry of insurance, amplified by the available data. And it is also interesting to understand how the new European legislations, as the Digital Operational Act, the Financial Data Artificial Intelligence Act, that Elkema has talked about, really are important in the way we insurers would work. Another important element is the EIOPA, aimed to support the supervisors community and to avail of the opportunities offered by the digital transformation while ensuring an increased protection of consumers. Our new thanks, Mrs. Petra Halkema, for your words. We are now going, ladies and gentlemen, to continue our work with the next panel that is very, very close to our hearts on cyber insurance. Having myself been consultant in cybersecurity, this is an extremely interesting topic in which we see the cyber risks emerging at a time when the companies, individuals alike, are confronted to increasing threats. The understanding of these dynamics of the cyber insurance assumes primordial importance. Our experts are going to shed light on the trends of the market, on the regulatory influence, and we're also going to talk about the impacts of the world threats and the strategies to address these emergent challenges. This panel is going to also be in English language. Please feel free to make use of the interpretation headsets if you would ever need it. Well, come with me, Mr. Robert Neal,
chargé des affaires internationales.
Legal advisor of the American Property and Casualty Association. Yeah, bienvenue à vous, monsieur. With us also Mr. Gabor Jaimes, specialist of cybernetic insurance, the Insurance Against Natural Goods Swiss Insurance Association. Let's give him a round of applause. We are also going to have with us Mr. Eric Harriero Farcott, a underwriter of specialized treaties, insurer and reinsurers, international reinsurance Beasley. Thank you for putting your hands together for him. Have I? On the picture. No, this is the right picture, ladies and gentlemen. This is the real grandeur nature person. Yeah, please. And okay, sometimes we have these little nods to see whether our audience is agile. Therefore, a very good friend of his, so we remain within the family. Ladies and gentlemen, we are going to also have with us Mr. Afsar Ali, Cyber Risk Intelligence of the United Kingdom, International Guide Contact. Well, thank you for hosting him warmly.
To you all. Cette discussion se passera en anglais aussi. Donc.
This discussion is going to also take place in English. Please use your headsets if you need them. Voilà, donc je vais passer à...
Pleasure to have you with us here today. We have about 30 minutes for our conversation, so I know some of us also have flights, so we'll cover this very interesting topic. As I mentioned, I've been a consultant in cybersecurity before, so I'm very much looking forward to your insights. I'd like to start with you, Gabor. Could you please, so you lead the cyber, property and natural hazards insurance practice at the Swiss Insurance Association, which represents the Switzerland-based insurance and reinsurance companies towards Swiss government authorities and in strategic markets and initiatives. Additionally, you are a board member of the Swiss Financial Sector Cybersecurity Center, advocating for improved preparedness in case of large-scale cyber threats. Could you please provide insights into the stages of development of cyber insurance across different markets? Petra has shared some insights about that, really interesting. And if you could additionally share any specific observations from the Swiss and European markets. Thank you so much.
Hi, thank you everyone. Thanks for staying till the end and joining this panel. Happy to be here from Switzerland. We heard yesterday, right, that we have participants from about 45 different nations attending this conference. And when it comes to the cyber insurance markets, there is a big difference on the maturity of the different markets. Robert will probably allude more about the US, similar like the UK, very well developed cyber insurance market already with decades of experience, expertise in that space. The European Union countries, or in Europe, continental Europe, in Switzerland, we have embarked a little bit later on that journey. We see it also on the market penetration. For instance, in Switzerland, we have a market penetration of about 7% for commercial cyber insurance. I think US and UK are comfortably in the double digits when it comes to medium and larger size companies. So this basically defines your starting point, right? If you have decades of experience with the product, you have a high penetration, the insurance industry has generated already quite a bit of trust in the market. And combined with the insurance industry's DNA, which is identifying risk, assessing it, manage it, designing the products that are needed by the consumers, you know, you're creating a strong voice to the public, to the businesses, and you need to leverage that, especially in cyber risk and cyber insurance, because the first step you can take, no matter at what stage you are in the development of the cyber insurance market, is to build awareness. It's building awareness with individuals, building awareness with companies, just to increase cyber literacy from the ground, or if it's already a little bit up, to keep increasing, because digitalization, and we heard the different threats today, they are emerging constantly. So you can't stop investing into that. Then, as you build your business, you know, it becomes relevant that you collect the information from the market. I think yesterday there was also a presentation of the value of collecting data analytics, so that you can have clear facts of the market that you can use in your further communication. So coming to what is doing Switzerland about it, it is obvious that building awareness and promoting prevention measures are at the top of our agenda. And there we work really closely with the government, just as a PPP, public-private partnership, that we reach all corners of our country, of businesses, of individuals. And then we started to embark with the analytics. We collected the information quite quickly about the markets, and we went a step further, and we've modeled the market. We used one of the leading modeling companies to support us to find out what is a potential economic loss from a cyber attack to Switzerland as a whole, as an economic loss, and how much would be actually insured in such a case. And obviously it demonstrated that the protection gap is still very high. Having all these analytics and these modeling outcomes now at your hand, it's important that you continue with the communication, continue with the dialogue with the various stakeholders. It's also important to get the media on board. Yesterday we've seen that there was a panel about the earthquake in Morocco. It is obvious that such a destructive earthquake, you can immediately show it on TV, and it goes into everybody's head what it can cause. Cyber risk and damages from cyber attacks are generally invisible. You can only see perhaps that the business next door went bankrupt one day, but you don't know maybe why. But the media is important to raise this awareness that cyber attacks are happening to any company of any size in any country. Well, I mean, that's a lot of a burden. I think it's important to know that the insurers or reinsurers are not alone. We have the brokers also on our side. We have a whole cyber ecosystem of IT service providers that need to be leveraged. And finally, I have to say, cooperating with other insurance associations that are ahead of us is very important, because it allows you to take bigger steps at a higher frequency to catch up, which is necessary to meet the demand in the market.
Thank you so much. Thank you for sharing those thoughts with us. Indeed, raising awareness is a key component, as you mentioned, and we'll discuss a little bit further later on other topics. Over to you now, Eric. Why is cyber security so crucial today, and where do you see the most significant threats?
So, hello everyone, thank you. Thank you for coming. Well, I just brought my luggage with my computer, with all the information, personal information that I have there, and I want to see where it is. It is important. I mean, we, in a proper manner, individuals, we manage a level of data that probably a big computer of the 2000s could not ever handle or manage. So that means that we are like transacting every day crucial information, financial information, personal data information, credit cards, bank account numbers in one device, like our cell phones or even the computer that I have just in front of me. So yes, we at Beasley, I come from an insurance company. I work with my colleagues. We work always with my colleagues, brokers' colleagues. We split the threats into crucial threats. So internal and external, outside, inside threats. So what are the internal threats that we see in the cyber market? Employee negligence, human errors, Did you know that the 50% of cyber incidents occurs due to human errors? This is something that probably people think that it happens only with hackers. It only happens with external threats, and it's not true. It's also human errors. Even in the digital era, in this revolutionary era, we are humans. We make mistakes. An example, very common example that can impact to a company in a high, in a economically in a important manner. It's the common email you send to someone. You think it's the person that you are sending the email. Because sometimes when you just put in the Outlook address emails, you put the name. Sometimes it appears. You start typing the name, and you will see that it's the person you are addressing to. But sometimes it's not. Sometimes it's another person with the same name, and you are sending probably financial information. This is a breach. This is an important breach that a human person, again, it's committing. So what are the external threats that we see at Beazley? The external are, as you may imagine, malware, hackers, ransom, all the business interruption that could just occur due to the malware or a hacker getting inside the systems. This is the other 50%. And I would just put an example of what's happening today, because cyber is not the future, cyber is the present, and I would even say the past. I will put an example. Beazley, where I come from, is probably one of the largest reinsurers in cyber risks. We know, and we can get to the global data and losses ratio data worldwide. So we in Q3 2023 we had a loss ratio worldwide, let's say, on or about 800 billions US dollars. Yeah. 3 months later, I mean, at the end of the 2023, we just got the loss information that was 1 trillion with T US dollars. So in 3 months, the increase was 200 million, billions again, billions. I'm saying well, billions of US dollars. So, yeah.
That's a significant amount indeed. Thank you for sharing that. I'd like to move to you, Robert, now. You are the Vice President, Head of International and Counsel for the American Property and Casualty Insurance Association. And prior to joining them, you spent over 10 years at the American Council of Life Insurers and also worked in the newly formed Federal Insurance Office in the U.S. Treasury Department. We'd love to hear the U.S. Perspective. Could you please describe recent cyber insurance market developments in the United States, and how is the market evolving?
Absolutely. And first, I'd like to recognize my fellow colleagues, very pleased to be here, and recognize Bashir and Mohammed's and their team's hard work. An excellent conference, seems to get better every year. I'd also mention that the APCIA, where I work, is the chair of the Cyber Risk Working Group at the Global Federation of Insurance Associations, where we do work closely with our supervisory friends at the IAS. So I know several of both of those groups are here. So I'll get into a bit of what's going on in the U.S. at the moment. The cyber insurance marketplace has largely stabilized. Ransomware attacks are continuing to dramatically increase, however. Cyber premium rates for the same coverage went from relatively flat in 2018 to peak growth of nearly 35% at the end of 2021, but have now dropped to near flat at a 0.07%. Overall, cyber premiums in the U.S. are expected to reach $15 billion next year. Several cyber catastrophic bonds were issued last year, 7 in total, bringing additional capital to the market. We have new regulations in the U.S. at the Securities and Exchange Commission that require all publicly traded companies to disclose cybersecurity breaches within 4 days. Ironically, the cyber attackers are the ones reporting breaches on the companies they attack, often timing their attacks on Friday to give businesses almost no days to respond if the businesses don't pay the cyber attackers. APCIA and the Council of Insurance Agents and Brokers have surveyed our members on potential gaps in the market. Most of our members believe that many of the current coverage gaps will be addressed in the long term, although the entities that are having difficulty obtaining adequate coverage include government, utilities, and healthcare. We're debating how to define truly catastrophic cyber events. There are particular concerns about critical infrastructure, such as power grids and water supply, as well as concerns about the aggregation of losses from a nation-state cyber attack on the U.S. Would also briefly mention that in the U.S., the federal government is considering a federal cyber insurance backstop. Our member companies are still debating the appropriate role of the government in addressing any cyber market gaps, stressing that any involvement should be very narrowly tailored and not a risk-sharing mechanism like our current terrorism risk insurance program at the federal level, particularly since the cyber insurance market has now largely stabilized. In the U.S., the Federal Insurance Office has completed phase 1 of its assessment of catastrophic cyber coverage, including a report from the Government Accountability Office. And next steps and what they might consider are expected to take place following a conference slated for May 16th at Treasury in Washington, D.C. So APCIA, my employer, is fully engaged there and can certainly report back, but I'll wrap up now.
Thank you so much. Thank you. We'll come back to you later to learn a little bit more about the report and the publication that the Global Federation of Insurance Association has recently published, and we're looking forward to that question as well. Now, over to you, Asfar Ali. You lead the Guy Carpenter's efforts in cyber risk intelligence for UK and international. My question is, given the dynamic nature of peril and how it is constantly evolving, how can cyber modeling help us understand the impact of systemic events?
Thank you very much, and thank you for having me here, everyone. So to answer your question, really, I think to provide a little bit of background, at Guy Carpenter, my efforts, or my colleagues and I, we are focused on the issue of cyber aggregation. So how can one systemic event really have a market-wide impact? And we've been doing a lot of work in regards of that to better understand how this peril can manifest itself systemically. Because for cyber insurance to prosper, we need to be able to quantify the peril in the most representative and most accurate way. So the way in which we do that is, the market has made a lot of efforts in this regard. We collaborate with a lot of modeling vendors as part of our efforts. And each of these modeling vendors have their own unique methodology to which they approach their efforts in understanding cyber aggregation. Now, one of the main questions that we get asked a lot, particularly in my line of work, is, which is the best vendor model? Which is the most correct one? In my eyes, I'd say that's a pretty unfair question and the most incorrect one to ask. I think, it's best understood in terms of what are the nuances of the vendor models. Do we understand their underlying methodology? Are we stress testing those assumptions? For us at Guy Carpenter, we believe in proposing a multi-vendor view, is trying to discern a view between all the vendor models and seeing where those nuances are and where those details are. And that's where you can really start to understand the benefits of aggregation modeling. Modeling in general is very much still in its infancy. I'd say when you look at the modeling background, the historical data is very scarce compared to what you would say on the NatCat side. And so these vendors, they have to work from a prospective basis. They have to look at the risk profiles and come up with a way to best make sense of future events that could transpire. So in that regard, the modeling landscape and the vendor models themselves, they've come quite some way in terms of understanding or interpreting firmographic information. And when I say firmographic information, what I mean by that is, what type of industries do these companies operate in? How much revenue do they generate? What are the technological dependencies within their systems? In that regard, I'd say the vendor models have come quite a fair way in standardizing their understanding across different industry verticals and how they behave and respond to different cyber events. For me, the next challenge, let's say in the next 5 to 10 years for these vendor models will be how transparent and how best of view can they showcase to us around key technological dependencies. Do we understand the type of third-party systems that are being deployed? Do we understand the business criticality of these systems? This will be the next challenge for these vendor models, and I would have to say, things are looking promising. We are collaborating very closely with the different vendor models, and it's a process that we will continue working on going forward.
Thank you for sharing that. These are all questions indeed that we have to look into. Thank you again. Gabor, coming back to you with this question, considering the significant protection gap that still exists, even in evolved markets and well-developed cyber insurance markets, what do you see as the next step to mitigate the impact of a large-scale cyber attack? And how can insurers and other stakeholders collaborate to address this challenge effectively?
Happy to give you an example again from Switzerland. We very often talk about preventive measures for a very single company, a business, a financial institution. But as we learn in this moment, cyber risk by nature is systemic, and several businesses or financial institutions, major financial institutions in a country can be affected simultaneously. So basically the next step of protecting the economy is to have a collective preparedness. Very similar to what we've heard yesterday with the earthquake risk, right? If you're not prepared, if you're not well prepared for something that you know that can happen in the next years or any moment actually, then you've lost, especially in cyber. Every hour that you can save with with good preparation, is to your benefit. So in Switzerland, we've taken a slightly different approach than in the European Union. In Switzerland, the National Cybersecurity Center has mandated the financial institutions, the banks, the insurance, the reinsurance companies, and believe me, there are a lot in Switzerland, to establish an association with the sole purpose of addressing this scenario, that several institutions are down for an extended amount of time, and that's the Financial Sector Cybersecurity Center. So it's in our hands to prepare procedures or a crisis organization, crisis response plans that are effective, so that within a reasonable amount of time, the operation of these institutions can be up to speed again. And having said that, just next month there will be a national cyber exercise in Switzerland when all these financial institutions come together. It's generally the C-levels of these companies and run some of these extreme scenarios according to our playbooks that we have prepared and see whether they're effective enough. So this exercise will be then very relevant to then take the learnings and bring it back and improve these procedures. It's a dry run, it's theory, but we think something like this, some outages of critical infrastructure, payment system, cloud providers, telecommunications, they can happen, and you have to be prepared for that, and you need to exercise just like for any natural catastrophe type of a disaster.
Thank you so much. Really interesting to learn about this dry run, as you said, but at a national level and involving all the C-level executive in the financial industry. I think this is definitely something we might want to consider and to prepare ourselves, as you said, preparing ourselves as much as possible. Thank you so much. Eric, we heard about some of the regulations in Petra's keynote, and I'm wondering, how do third-party and local regulations affect cyber insurance coverage? Specifically, how do laws like GDPR, and we've been working on that a lot, how do they impact corporations' vulnerability to data breaches?
Thank you. So, well, corporations thinks always in first liability, like business interruption, property damage, losses. So the big impact of the business interruption, we know. But one of the most probably important or relevant loss for a company could be the liability. So the loss of data information for a company could arise in penalties, fines and penalties, in a level of a total loss. And some of the medium and small companies in the last year did close their business because the lack and the loss of data, personal information of their clients, of course, of the customers, of the employees as well, as you might know. And so is the main reason why regulators are trying to protect their people, their citizens with that. I mean, regulator, it's important to know that most of the Western countries are already implementing from the government this type of regulation and laws. This is something that will occur in a similar manner in all worldwide, in all countries, not just in Western countries. We know the GDPR imposed by the European Union, that it's just being imposed in every of the European Union countries. Just to put you an example that I think it's interesting, a real example, occurred in COVID-19. And I say COVID-19 because it was probably the most exposed the most exposed digital era that we ever had in cyber crimes. So this is a real example of a big company in Europe. I won't say the name. I won't incur in confidential issues. So this big company, a prestigious company, just was hacked. So the hacker just get inside their systems. As you can imagine, a big airline company has a lot of information from their customers. I would say thousands of that. So this attack should be notified immediately to the regulator. They didn't because probably they thought that their image was going to be, maybe for image reasons, they didn't notify. So this cost to the airline company on or about, let's say, we don't know the exact numbers, but on or about 180 million euros, sorry. So this is not the only thing that they need to do to notify to all the affected or unaffected customers. They also need to pay all the fraudulent transactions that just the hackers made with their credit cards, with the information of the bank account numbers and everything. So it is important to follow the local regulations. It is very important to follow the protocol when a cyber crime appears, when a company is hacked or is attacked. So this is the main issue.
Yeah,
right now.
that's a good reminder for everyone indeed to follow the regulation and the protocol in case a breach happens. Thank you again for sharing that real life example. Robert, I understand that the Global Federation of Insurance Association recently published a report on protection gaps, including those in cyber risks. Could you walk us through some of the main findings regarding the cyber protection gap and the potential levers that were identified for private and public stakeholders to use to address the protection gap?
Absolutely, and JIFIA's report actually covers a variety of protection gaps, including cyber, so folks can take a look at it on the JIFIA site. And I know that our supervisors at the IS have also been working on protection gaps, so just mention that as well. But with respect to the JIFIA report, cyber risks are growing in frequency, severity, and variety, and insurers and governments are thinking about how to address related protection gaps. The increasing presence of technology and exponential use of data in almost all aspects of life is a global phenomenon. The number, severity, and types of cyber attacks have grown globally. Insurers and other private and public stakeholders are working to address the increasing need for cybersecurity and related financial protection. However, the market is still relatively nascent, especially in terms of the evolving regulatory environment and the developing awareness of cybersecurity and prevention measures, and in terms of the rapidly evolving nature of both the technology landscape and the nature of the threats. The Global Federation of Insurance Associations explored the implications of the cyber protection gap in its recent report, Global Protection Gaps and Recommendations for Filling Them. It noted that the U.S. is the largest cyber insurance market, accounting for roughly 70% of global cyber gross written premium. Although increased loss ratios in recent years have made insurers reconsider their cyber underwriting policies and risk appetites, the supply of cyber insurance in terms of gross written premium is growing and is expected to reach 13 to 25 billion by 2025. With the increase in technology and digitalization, annual economic losses from cyber incidents are estimated at over 0.9 trillion. However, due to the small share of insured losses, the estimated protection gap remains approximately near that. Although the supply of cyber insurance is expected to grow, it's unlikely that the cyber protection gap will be closed soon due to the small share of insured losses today and the rapid speed of digitalization, making businesses increasingly vulnerable to cyber attacks. Furthermore, since they are dependent on the regulatory environment and public cybersecurity infrastructure, insurers will not be able to narrow the cyber protection gap alone, particularly for potentially systemic cyber risks, meaning private and public stakeholders need to collaborate to address the fast-growing cyber protection gap. Individuals and organizations need to seek cyber protection and proactively engage in prevention. Various levers exist for private and public stakeholders to use to address the protection gap, however. These include incentivizing and supporting prevention, conducting awareness campaigns, developing incident reporting frameworks, and fostering adaptation measures. So I'll wrap up with that.
Thank you so much for sharing some of these findings. Again, as mentioned by Robert, we can find the full publication on their website. As a wrap-up for this panel discussion, Afsar, I'd like to give the final question to you. We touched on the systemic nature of peril. Do we really understand what a global cyber catastrophe event would look like for the industry? Could you share your perspective on that?
Yeah, no, certainly. I think, again, just going back very quickly to recap, as I mentioned, historical data is quite scarce for cyber incidents. And so we have to be very prospective, very forward-looking in how we approach systemic cyber catastrophe modeling. Now, if we were to have, any sort of reference point from the past, the only two events that we could potentially call a CAT event would be WannaCry and NotPetya, which occurred in 2017. Now, those two events were quite significant in the market. It really opened up everyone's eyes to the potential for cyber to aggregate as a peril. There's been a lot of talk about protection gap, and I think one useful data point for everyone to refer to is when you look at NotPetya, the reported economic loss from that event was approximately $10 million. So that was the economic loss. If you were to distill that down and try and observe how much of that loss was picked up by the insurance market, that would be approximately $3 billion. Now, that's the insurance market as a whole. If we were to go down another step lower and see how much of that loss is then picked up by the cyber insurance market, it picked up roughly 10% of that, so around $300 million approximately. So if you want a reference point for protection gap, that's a good example as any that we have. But that being said, that's the only reference point that we have at our disposal. And so here at Guy Carpenter, what we wanted to do is we wanted to model the global cyber insurance market to see what the potential losses could look like. And so this is where we collaborated very closely with our vendor model partners to come to two different views. First of which is, what is the size of the global market? The size as of last year, for 2023, we quantified the market to be approximately $14.3 billion. The US market comprises roughly $9 billion and the international market at $5 billion. So that gives you an idea of what the spread looks like. When we carry out the modeling, the results were quite interesting. What we noticed was that for a 1 in 200 systemic loss, it should not exceed more than $33 billion. So to put that into context, and I know these are very big numbers, you're looking at a loss ratio of around 230% loss ratio at the tail. Now, is that a good thing? Is that a bad thing? You know, again, it's all about context and contextualizing your data. We carried out a similar study 5 years ago, and the loss ratio that we were looking at the time was just over 500%. So what does that really tell us? It tells us that the modeling view has improved over the past 5 years. There is much less volatility in the risk, and the vendor models are slowly coming to a view of what the tail looks like. Of course, there are many areas of divergence and convergence that we could still distill down into, and how that tail view is influenced, given the fact that different regions across the world, from the US to the international markets, they all have different appetites in how they approach cyber and the type of coverages that they offer. And so that will, particularly the international side, will then balance the global view with a diversifying effect, because we do see differences in appetite across the UK, continental Europe, APAC, and the rest of the world. And so that's something that we are looking to investigate further into the future. I think as far as estimations goes, for this year, we're looking at a global premium of about $15.8 billion as well. So that will be the reference point for the year going forward, really.
Thank you. That's an interesting figure to keep in mind. Well, ladies and gentlemen, I'd like us all to give them a round of applause, and thank you all so very much for being with us for this 10th edition of the Rendezvous de Casablanca. Thank you very much. We invite you, gentlemen, to stay with us for our last panel of today's session as you're joining your seats back in the room. Mesdames et messieurs, nous allons maintenant poursuivre avec le dernier panel de cette deuxième journée du Rendez-vous Casablanca de l'assurance sur une thématique.
So we're going to continue on a very interesting topic. Thank you again for your attendance with us, and thank you for staying with us until the very end, until the lunch cocktail that is planned right after this. Now we're going to talk about how the emergence of AI can influence the business model of insurance companies. And I'd like to thank you for welcoming with me Gianni Foccarelli, the president of the Italian the insurance industries. And thank you very much. Please take a seat just next to me, and thank you for your attendance. And we are going to welcome Mrs. Isabelle Antoine, the Managing Director of the IRD markets, professional and private markets, AXA.
And we are very pleased to have with us Felipe.
Individuals, and we have Felipe Restrepo, CEO, a technical director and co-founder of Odaptos. Bienvenue, Monsieur Felipe. Alors, and we have the pleasure to have with us, last but not least, Charles Lepillier, founder and president of Capit Consulting. So this conversation, ladies and gentlemen, will be conducted in French and English, and I'd like to kindly ask you to keep your headsets, simultaneous interpreting headsets, if you need to use them.
Make sure that you are equipped with headsets if you need a live translation. I think so. Everyone has their headsets.
Je pense que tout le monde.
Do you need one? No. Okay. Perfect. Well, thank you once again. Merci beaucoup à vous.
So thank you very much to the four of you for being with us.
For this panel discussion, and then we'll wrap up together this wonderful event. I'd like to start, je vais commencer par vous et permettez-moi de passer.
Allow me to move from French to English. Two of our speakers are French-speaking speakers, and two of them are English speakers. You had a flight at 2 p.m. and I hope you could change your flight. So let me start with you as you need to go. So to start the discussion, to what extent do you apprehend and address the IA issues and problems within enterprise IANIA, and how do you actually address the impact of IA on the insurance business? Thank you very much for the invitation, and I'm very happy to be with you here. So the term consulting maybe can incorporate a range of expertise and competences. Our specialty is rather to assist and accompany the insurance business market in their transformation and development, digital development. So we kind of provide back office and front office services that address their needs, and we integrate in the AI architecture. So we work with technologies. So we need to keep an open eye and technological watch. And within our firm, we give a full priority to innovation, and we have integrated an innovation program. We started an incubator to include the startups, and we are part of an innovation laboratory where we design prototypes and start pilot studies and projects, see whether it works or not. And we also have started a partnership with a tech company that really helps us to ponder on the AI influence and impact on the insurance industry. So coming back to your question, the impact on the value chain. So for a couple of months now, we've been working on a case study. So we have classified and listed the user cases according to 3 categories: the maturity of the users, the complexity of implementation or implementing AI with the insurance businesses, and the return on investments, lastly. So when you work on all these user cases, you see at the end of the day that whole value chain has been impacted. So let me summarize and give you some concrete and practical examples of the user cases. The first user case is the customer relation. So the chatbots, the voice box that are actually managing already the client interaction with these technologies. And I'd like to talk about them because the chat boxes of today are no longer the ones of the past or the recent years. So we have generative ones. So we have cases that are really successful. So also the number of customers has increased. So quoting Salirani, a great French mathematician, we want to augmented advisors and not augmented technologies. So we want to bring IA analysis, crossing data to do cross sales and having a customer sales on the feedback of the calls he got, on the exchange of emails, his exchange with all his interlocutors and partners. In the customer relation is the hyper-personalization of the background and the careers. So we have Otaki companies. So all these sources, please just keep in mind that all these sources are open, public, open source. So what we do is set up prototypes or typical profiles of clients, and according to the profiles, we're going to adapt in real time the customer's experience. Sometimes we display a simplified board or digital board, a guarantee board for those who are not veterans in the insurance business, and we design others that are tailor-made for the insurance business. Another important element is the emotional technology, or analysis rather.
Ensuite, toute la partie.
And then we have the measurement of the customer satisfaction, analyzing all the exchanges and measure the low or high satisfaction reactions, and also after this, starting the marketing, if need be, services and opportunities. Attrition, predictive and forecast measures allow us to forecast which clients are going to leave in a couple of months. This is important as a user case that we have developed. So the principle is quite trivial. We're going to build, or rather, we're going to take clients, we're going to build a range of data around them, and then we're going to look at year -5, what a customer has been insured, and -4 year who have left. So and we're going to assess the strong signals, the low signals, and also figure out in what year this client will be ending his contract. So the complexity of implementation is not very strong, but keep in mind that we need data for this. I mean, the key factor, the success key factor is data. So this is very important. So the second important axe is the impact of AI on the internal operation. So we are currently able to automate management process, starting with KYC, with analysis and documentation. It works pretty well. And Prix par vie example has actually worked on the identity control of their customers. So they moved from 2 weeks identity control of their customers to 2 seconds. So we also have the automation of process part on the estimate and assessment of the liabilities, or the group Covea, GMF, and others who are working with solutions like Attractable, Mong, and others on the image analysis of car deterioration and car damage and claims. Also, the processing of emails for clients, for all the reasons I referred to earlier on, that can maybe justify the kind of, or tailor-made the kind of email we want to respond with. And also the fraud. Fraud is very important. The figures, data that are already available with a range of clients in France. So all these user cases are working pretty well with the level of maturity. So the third axe now with insurance companies is the risk management and mitigation. So we are able to integrate the level of risk. So Namer, for instance, is an app or platform that is taking the satellite images of the housing for the housing registry and ease the categories of prices. So this is something that we can do with external data processing, remote sensing, geological satellite images on drought. So we're going to be able to say at what point we should be watering our crops. And there's another company, Accurate, that is working very well, that really proposes actuarial or currently calculations that instead of going back to 30 years variables, so now we are able to integrate a lot of other variables and ease the actuary work. So this is only part of the user cases I can mention, but this is not comprehensive, believe me. So thank you very much for sharing with us all these examples in all these different sectors. So let me, if I may, I don't want you to miss your flights, please. So, we change our flights. Of course, my flight was changed. Take your time, so you can stay with us. So let me finish this first tour, and I want to have your sense on the limitations that have been identified on the AI. So, Daniel,
with us. We'd like to hear your perspective. We just heard now some of the interesting usages of artificial intelligence. Now, insurance companies are heavily investing in adopting innovative technological solutions to support their activities with AI applied across the whole insurance value chain. How are technology-driven transformations changing traditional business models in the insurance industry?
So first of all, let me thank the organizers. It's been a fantastic event, and Bashir, let me congratulate with you and your team, because definitely has been one of the most interesting events in the year. So the question is very long and complicated. Charles already gave use cases. So let me just give a brief description of the market as I look at, and in particular with the consequences for the insurance market. First of all, is already a big market, and it is rapidly growing. I'm not going to give amount and figures, but at least two things we have to tell. First of all, investments are already 150 billion, and they are increasing very rapidly. We have to say, very frankly, that most of the investments are from the US and China. So Europe and other continents should be more, let's say, more involved in this kind of investments. Second point, the market value. The industry now is evaluated at $200 billion, but at the end of 2030, so very close, will be 10 times higher. So definitely this is something that we have to work with. And the financial sector is the most important application of intelligence, artificial intelligence. Already said, so I'm not going to repeat. And the three main reasons, again, have been already said. Customer engagement, create virtual expert, and content generation. Maybe this has been underlined. I mean, you can adapt the documentation you give your client, adapt the contracts to the people that you have in front. And this is something completely new. So looking at the effect and the impact on the insurance industry, two things is important. We want to be close to our customers. We want to be partner of our customer, and we want to be their advisor against the risk, but also against other possible events. So this is an important thing to underline. The second important thing is that, of course, we do it with much more efficient ways, and this is, of course, will reduce the cost of insurance, but also will increase the possibility to offer insurance. I'm not going through the use cases, but this is a key point. If we want to reduce insurance gap, we have to follow such strategies. This is something very important for me.
Thank you so much for sharing that, and I'll come back to you with a second question on how to reduce the insurance, the protection gap. Thank you again, Dario, for sharing your insights with us. Isabelle, je me tourne vers vous maintenant. Nous avons écouté tout à l'heure.
Well, Isabelle, we've been listening from Charles Lepilier, the different user cases in the sector. No, you are in charge of the retail market in AXA France. So we have seen this reality quite rooted. So can you share with us some usage cases within AXA? Thank you very much. I'm very happy to be with you here. So I really related myself to what was said before. with AXA France, we have put data at the very heart and core of our strategy, and it's part and parcel of our 3 first year strategy. So we are aware of the turning points with the economic drawbacks that might stem from AI development, but still we have 20 usage cases that are under production or under implementation around all these areas that have been mentioned. So we have a 360-degree vision of our clients to better apprehend the risks, to propose a supply side or an offer that would meet his requirements. So the client is at the very heart of our concern, always. And in addition to this, we have all the use cases on the operational excellence, how we can better advise, the LCRC language interpretation, documentation, processing, also improving and selecting, pre-selecting and sorting out the tasks for our co-workers, and also have using all this contribution at the benefit of our customers. So the third fundamental act for us, and this really echoes all the discussions on risks that were mentioned today, climate risk, inflation risks. So we need to be much more proactive and reactive, and we need to put the data at the service of the excellency, and we need to be able to deliver faster in our systems the good pricing level. We also need to have internal data, the external data that could be exploitable, and all this, of course, we can sign MOUs with startups. This is another path to see how we can benefit from the partnerships with our partners, but also how can we make sure for our systems to be more agile and fast track. For example, we have a usage on pricing to make it our brand more agile, talking about the possibility to change our prices under lower than 1 month. And this is quite fundamental for us, and is also helping to kind of ease the work of the auctioneering collaborators, and we need to match with the increase of the data, improve its quality, and the possibility to deliver value use cases.
Qui nécessaire de votre point de vue?
To the necessary prerequisites, we'll talk about those that you think are indispensable. Philippe.
Odaptos, which is a really interesting video platform that allows for analyzing emotional and the reaction of customers. We very much look forward to learning more about that. My question to you is, how do you think that AI-driven insights into these customer behaviors that you're able to collect, and how are they driving the development of new insurance products, and what challenges might insurers face in this innovative approach?
Yeah, thank you for having me here first. Everything has been said by my co-panelists here. It's really interesting, the part that we often forget when we are talking about artificial intelligence, and is the customer. We often go too quickly into analyzing the data, but data is not human. And we are building products for human, to take care of the human lives. So having a platform or a technology that, like artificial intelligence, help us to really understand the core of the person that we are facing in front of us as a company. And the insurance has a lot of opportunities to grow here, because they can easily build and use artificial intelligence with platform like the one that we built in Odaptos, or a platform like what you mentioned, Charles, Dotaki, that can help you actually think about the human and its insights and everything and all the information that this person is giving us as a client, to be able to build more engaging opportunities in marketing, communication, user journey, but also the offer that we create for them. Like, for example, I often dream about a company that, as an insurance company, that I can buy a house for example. Then I buy an insurance for my house, but then soon after they have all my data, they can propose to me other kinds of insurance that can help my life get better all the time, you know? And this can only be achieved by analyzing all this data and having the human at the center of the process. So I think that artificial intelligence is going to play a huge role in everything that we do in this market, in the insurance, to be able to ensure that the human perspective of it's taken into consideration, because we can analyze such an extremely amount of data that is really important to also have this connection with the user and with the persons, you know. And as the keynoter that was behind us said, one of the most important things that is going to happen with this is going to be privacy concerns and the regulatory part of it. How are we going to handle the data of our users in this case when artificial intelligence is going to mix all this data to guarantee that all this is anonymized, that we are respecting the private life of our users, and that we are, with the cybersecurity teams, we're ensuring that this doesn't create a problem for data leaks and stuff. IA Act is going to be a huge change in the way that we do business and how we apply artificial intelligence in our systems. And I think that the insurance has to step forward on that side as well to ensure that all this information is well guarded and will protect according to the regulations.
Thank you so much. Thank you for sharing that. Really interesting indeed to learn about this new aspect. I'd like to offer you all a final, remarks. Un dernier tour de table rapidement pour clôturer ce panel.
By way of closing this panel, since time is of the essence and there are many things to be said, I know in the room too, and the YouTube audience on this thematic of AI and its impact on the business models on the insurance sector. A word, Mr. Charles, for the limits you've identified. I've been concrete enough in the first presentation, in my first part of presentation. We're going to try and take some hindsight. First impact is organizational. It will be essential for the players to invest on information and awareness raising of all of the companies as to what the new technologies are doing. We need to train them, raise their awareness, and mainstream also and integrate populations that were not hitherto present on processes for the creation of products. Typically, of course, the IT departments are the ones in charge of that. We need to integrate, of course, the internal informatics departments to that. We need to also include the staff representatives to make sure, from an ethical standpoint, that will have to be done. So this is awareness raising internally already. Following which we will need to have a whole reflection on the new jobs and business lines that are going to emerge. IA manager, IA steward, we will need to ask questions as to, first, what provisional management of staff and competencies I can have to develop these new jobs, and potentially externally look for these new business lines and skills. And after that, of course, how we can integrate all of these organizations already existing processes. This is the first limit, organizational limit. Second limit, new technologies is tantamount to new exposures to risks. First, related to this technology, you've already have heard about that, the biases. In other words, all of the nonsense and false answers that a machine can give us. So therefore we need to also work on the limitation of such risks through engineers' work. We need to test, we need to culture the machines to one's environment. Second risk is if you expose your technology, GPT technology with generative IA, to your final customers, you are also exposing yourselves to new cyber attacks of ill-intent people can come and inundate, flood your machine to cause them to do cause cognitive biases. So another risk, quite obviously, is the confidentiality policy. We have regulations at the European level. We need to respond to all those regulations, GDPR, to make sure the data is made anonymous, that there is no misuse, intended or not, as to the use by such machines. And in general, Philippe was talking about that. Finally, the impact on the value chains are going to be driven by this new legislation. With the IA Act today, I think we have quite a long way to go, since we see that we have defined 4 types of AI. Minimum risk, limited risk, high risk, and forbidden IA. Now that we've said that, I think we need to continue developing a global legislation, and following which we need to come back at a local level, regional level, on the different sectors to bring much more targeted answers to all of the opportunities that the use of such technologies can provide. Absolutely. This is a necessary regulation with its concerns vis-à-vis the deep fakes that are really problematic. We don't know how to make a difference between the real and the invented. Thank you. This is part of the challenge. Thank you, Isabelle, Antoine, in the French language, this time to close the prerequisites that you deem necessary. I echo what has just been said. There is an organization topic there, very important, and we chose to initiate a real data transformation program within AXA France. This program aims at disseminating this data culture, because it is very important to do that, to make the users accountable on the right quality of data, because training is important, but if you have bad data at the entrance of the training, you will get bad information at the outset of the training sessions. So this very governance, which must water and percolate through the whole company, through the business lines, and this coming closer between the business lines and the IT for a successful IA, it is something that is designed with the IT people, which is documented, which is informed, which is very important. And it is fundamental for the success and for the successful training, over and above the acculturation, the upscaling of competencies, in order to meet with the fears of some saying, well, will IA replace me in my activities? No, the activity is going to evolve, and the transformation is already at play. And we have to support our staff, our associate. We have to really fit them with the competence. The human will always remain centric, but it is important to transform and to really go over that step. Otherwise, we will not be able to hold a long way on and around the IA and the good use thereof. Thank you, Isabel, very much. Dario.
Previously said, and also your first remarks. From your perspective, what are the main concerns related to a wider use of AI in the insurance sector?
Okay. Very briefly to close. First of all, we have to move from damage compensation to global risk manager of people. This is something very important. Obviously, in doing that, we need data, we need technology, we need a lot of other ways to interact with clients. To do that, obviously, there are risks, and risks in artificial intelligence are very clear. It's what already Petra said before in her speech. There are risks of misperception. There are risks in terms of increasing the misinformation. biases and also ethical dilemmas. So as an industry, we have to find a solution for each of these risks. And European regulation, the AI Act that have been already said, is a first step, is a first attempt. To be honest, our feeling as European insurers is that there are risks also in being too severe in terms of regulation. We have to achieve an equilibrium, a trade-off, to solve an optimal trade-off between regulation and between protecting consumer. We will see during these years, because it will be a very long journey. I'm sure that the practical implementation of the AI Act will be very complicated, and definitely I hope that they will not stop the innovation. I'm sure that the innovation will continue, but what is important is that it continues toward the common goods of people. Thank you.
Absolutely, a long journey indeed ahead of us, and we do hope that it will evolve for the good of the people. Thank you so much for your closing remarks. Felipe, probably a final thought on emotional analysis and the usage in the insurance sector.
Yeah, as I was saying before, the human is very important when you are creating a product. That's across all industries. But I think that I don't know an industry that has more stress-related levels than insurance when you are a client. So either you are thinking on the death of a person and a catastrophe or something like that. So you're always thinking on things that are create stress in your mind when you're a customer. The existence of artificial intelligence brought back some things known and rooted in behavioral psychology, that is like emotional analysis. And this created a variant of artificial intelligence that is called affective nets. And the affective nets are very few in the market, actually. We are one of them. And these affective nets are designed to understand better the deep psychographic and emotional standard of a person, you know? And this is going to play a huge role in the industry because as an industry that has so many actors, that contains so many stress within the process, one of the differentiators that is going to change and increase the business opportunities, the adoption of different offers and stuff, will be how you build better experiences for your clients. One of the best examples of this is a mutuelle in France that is called Alan, that break the game but incorporated human-centered practices rooted in better understanding of the user. And this is getting more and more possible thanks to emotional and affective nets that incorporate the emotions in the creation of products and services. And I think that this is going to shape the world in different products. I think that one of the things that I don't often hear insurances call themselves is that they are e-commerces, you know, in a certain way. So we are moving from an old way of doing things with a person that was my advisor and stuff, and we're doing more things by our honest clients. And this has to be treated as e-commerce. And as an e-commerce, you have to underline better usability, better journeys, better services, and more human processes. And so this is what we think that affective nets are going to change. One of the examples is Dotaki, the company that we've been talking about. I love this service, is because they can create a psychographic chart from your navigation to define if you're a rational or an emotional person. And then, in real time, change the wordings that are used in your website. And this is like mind-blowing because it can adapt to already two different kinds of people. This is very interesting. I think that in the future we're going to do more psychographic and it's going to adapt to more different demographics. And therefore it's going to ensure that you're communicating the right message within the same product. And I think that that is going to be an amazing step forward into real-time customization thanks to affective nets And with Adaptos as well, it's like the process that we do in before, when the product is being created, is giving the possibility to, instead of spending a lot of money in market research, you use our platform and you get feedback in 3 days, and then you can build products much more faster that are more connected to humans, and it's all thanks to the capacities that this affective net have into analyzing everything in the emotional response of a user.
Fascinating indeed. Imaginez, mesdames et messieurs, effectivement, si nous venions à...
So imagine, ladies and gentlemen, if we were to operationalize and implement this by analyzing behaviors and face behaviors, we could update live the words and wording on internet according if we have an emotional or rational profile. And this is the great rationalization value that AI could provide. Thank you very much. Merci aux 4 intervenants.
Merci, mesdames et messieurs. Pendant
Thank you.
invité vice-président de la Fédération marocaine.
Re-invite the vice president of the Insurance Federation, Mr. Badou, Mr. Salahuddin, Mr. Bashir. Thank you very much.
On est très heureux de t'avoir.
You're really best breed. I only wanted to thank the panelists. I know it's not very rewarding what you come at the end of the second day because the room is getting depopulated. Voilà.
Panel, and thank you very much to be with us until the end. Merci beaucoup à vous.
Thank you very much to all of you. We are really very, very pleased of the whole Moroccan Gotha of the insurance and all of the foreign Gotha. Also, Salah, also a major kingpin of the success of this event. All of the federation team members, I will not mention them already. They're kind of, we are the face, the unseen face, because they work in the shadow and they have been walking. And I would ask them to give me the number of steps they've done through the mobile health application. I'm sure that they have certainly made tens of thousands of steps. Salah, a word. Well, to every one of you, thank you. It has been, still is, a real untold pleasure to be with you, and we therefore meet you next year again. Thank you.